And Bill, good morning to you. The big banks, are they important to the market thesis now that we are sitting just a stone's throw away from record highs?
They certainly are. And the good news is so far so good in terms of the earnings. Again, Wells Fargo was kind of I'll call it an outlier, but obviously a lot to do with the regulatory issues there. But in terms of what we've seen so far, I would call it a victory. So I expect some pretty good earnings from really the rest of them today, or at least the vast majority. That the financial sector is highly like to be one of the, I can say, the highlights of this earnings quarter, because it's not likely to be a good earnings quarter overall in terms of the overall number. The market thinks, consensus is down about 2% year over year. I suspect we'll get to flat or maybe a little bit up, but it's certainly not going to be a banner quarter on the macro side.
What was it that stood out the most to you, Bill, about those earnings reports from J.P. Morgan Chase and from CitiGroup? Was it the idea that the bond trading resurgence is back? Was it the idea that the consumer franchise is doing well? And what does that tell you about what's going to happen with Bank of America and Goldman Sachs later on today?
Yeah, and I think so you hit it kind of on the head. So one is you've seen a surge in the trading and the investment banking. That's likely to feed into those, like a Goldman. I'd say the other part that I try and read through is, consumer and loan demand in general was pretty good to me, because it's one of the things I watch in the big picture, is that probably means, again, if you're worried about recession here in the U.S., I don't think you have much to worry about here in 2020 because you've continued to see the consumer in a pretty good place. And if you get some sort of even pickup in growth, you probably see even more kind of loan growth there. So that's, I think, some of the read-throughs. And I'd say the other part, just in the financials, they seem to be doing in general, like I'll just say J.P. Morgan in particular, a great job managing their expense side. So that really showed up in terms of the bottom line earnings and the beats.
All right, Bill, an argument can be made that over the course of the past several months, the markets had run towards record highs in large part on expectations of a trade deal signing. We are getting that phase one deal signing today. Does that then mean that the markets need another hurdle to cross to keep going higher? What are we looking for on the trade front?
Yeah, so I think a lot of the positive is just even de-escalation. I was, in one sense, surprised that there was, you saw the markets kind of shudder over the fact that the tariffs, or at least some subset of the tariffs, were going to remain. I thought that's what everyone expected to happen. But I think you have to put it in the context of markets have run a long way since we kind of de-escalated the trade war. And so you've got investor sentiment at a really high level. So I do think in the short run, we're ripe for some sort of disappointment. Doesn't mean it's a big one. I think it'll be a buyable kind of dip here, but I do think today will be interesting in terms of how it plays out, because nobody in the markets anyway really knows the exact details of the deal. So I do, as I worry is an overstatement, but do think there may be a possibility that you see kind of sell on the news a little bit when we see the actual document.